Well, welcome back to Finance Uncut. On today's episode, billionaire Sam Zell issues an inflation warning, and he himself buys gold for the very first time in his investment career.
The Federal Reserve, as you know, particularly Chair Jay Powell, keeps saying it's transitory. We're going to have inflation. He says we're going to have inflation, and we're seeing it already. As you know, you're seeing some of the corporate returns.
We're seeing it all over the place. I don't think, you read about lumber prices, but, we're seeing it in all of our businesses. The obvious bottlenecks in the supply chain arena are pushing up prices. There's just, it's very reminiscent of the 70s.
But Jay Powell, the Fed chair, says, don't worry about it. It's a short-term thing. It's transitory. He keeps talking about transitory. Do you agree with that?
Didn't the head of the Fed say that in the 70s, too?
Do you think we might actually be headed back to the 70s? Because we've had actually disinflationary forces for quite a few years now.
Well, basically from 13.75% Treasury bills in 1982, it's only gone down since, and inflation has gone down since. To a large extent, the reason we haven't had inflation is because we've reduced the multiplier effect. The usual, historic perspective was for every dollar of stimulus, that dollar was, rolled over 2 or 3 times and created growth. For the period that we just discussed, the velocity for sure decreased, and therefore inflation was, much more under control. I'm without a specific answer for you, other than I see the pressures almost everywhere, and I don't see what's going to make it temporary.
So you are an exceedingly shrewd investor. If that's your view about the risk of inflation, how does that change your investments right now?
Well, I think everything that you're doing, has to include the assumption that costs are going up. The fact that there is a shortage of employment. Whether it be home building or many other industries, they can't fill the jobs that they have. We've created a welfare society that is really discouraging people. When you can make almost as much or more by collecting unemployment insurance and supplemental this and supplemental that, that's pretty dangerous stuff. And clearly, we're having trouble getting everybody back into the workforce because the alternative is so attractive.
So with a concern about inflation, at least the possibility of inflation, does that drive you into certain assets such as commodities, such as real estate, some of the traditional ways that you avoid it, or for that matter, gold?
Well, I think that the whole issue of fiat currencies is a very real issue. The United States is not the only country in the world that's printing too much money. Obviously, that one of the natural reactions is to buy gold, which I've actually done for the first time in my career. And it feels very funny because I've spent my career talking about, why would you want to own gold? It costs, it has no income and costs to store. And yet, when you see the debasement of the currency, you say, what am I going to be able to hold on to? In the same manner, I think all of the discussion about cryptocurrencies are all in response to the whole question of, are fiat currencies going to, diminish the value, and will they be a non-store of value going forward?
Breaking tonight, due to inflation, a picture is now worth 2,000 words. Now, I know there's a lot of memes and jokes going on about, inflation. There's pictures of lumber on the back of trucks and trailers, and people saying, "Hey, I've just passed a billionaire," and it's all fun and jokes at the moment. I was just chatting to a friend of mine who moved to Australia from Venezuela a couple of years ago, and I was asking her what it was like living in a hyperinflationary environment, and it's just insane. It's insane. Now, I'm not saying we're going to have hyperinflation, although some are. As I said, Dr. Michael Burry and Professor Richard Werner are saying 2023 hyperinflation. But just about everyone with any credibility in the market is definitely talking inflation. That inflation's here, inflation is coming. Whether it's secular inflation, stagflation, or as I said, some have now popped their heads out with hyperinflation. So it's not a joke. And from an Austrian economic point of view, understanding inflation is very important, and that's where I see things, and that's how I'm trading and preparing. So, Sam Zell, first time investing in gold in his whole career. For someone like Sam to invest in gold, he must be very, very worried about inflation. So, and I think you should too. Whether it's Warren Buffett or many other big fund managers or big investment firms that I am seeing and hearing, they're talking about their profit margin pressure. So their costs coming to them have skyrocketed, and that they can no longer withstand those costs. And they will be passing those on to consumers. So, some of the CP lie, as Jason Burak likes to call it, and I agree, CP lie, we know that there's inflation out there. However, they won't be able to fudge this when all these costs are passed on to consumers. The CPI is going to go up, and then the question is, what do central banks do? And in my next video, I'm actually going to address that, because there's some billionaires that are now warning of an asset price crash, starting with the stock market, but basically bond market, the everything market. And once again, it'll be interesting, and I'll share some details on how we expect gold and silver to perform if this plays out. And it all comes back to this inflation issue and inflation debate. When we look at the we're not listening to music. The M2 currency supply growth and CPI, we know where the CPI is about to go. When we look at this chart, the standard deviation from mean, when you look at the M2 currency supply increase year over year, and the CPI, that CPI number is going to go up, in my opinion. And therefore, gold and silver and commodities need to, well, for me anyway, they play a big part in my portfolio, because this is what I've been seeing coming. And now we've got Sam Zell and others, who have been warning about this. Even Ray Dalio has been warning about it for some time now. And everyone was surprised, what was it, late 2019, when he started talking about gold. And, so I still think, even on the fundamentals, real rates are going to go negative, because we're going to have CPI increase very soon. I believe central banks will try to do what they can to cap rates as much as possible. So that blue line will continue to go up, which means gold and equivalent silver as well is going to go up a lot more from here, just on the basic fundamentals. The question, though, remains is, when CPI, when the Fed and other central banks realize that this is not transitory, how do they play that? We've seen the Bank of Canada, we've seen the Bank of England, start to taper and start to wind back. The RBA here in Australia are going, hammer and tong. They're going flat out. The Fed and other central banks as well. The question is, when do they begin to taper? The Fed and the RBA have said 2023 until they start raising rates. So the next 3 years, basically, what they said last year, rates are going to be remaining on hold, but I don't believe they'll be able to with the inflation that's coming, the CPI that's coming, and some billionaires now are starting to warn about that as well. And I'll touch on that in the next video. Anyway, guys, if you like this video, remember to hit that like button, subscribe to the channel, hit that notification bell. Take care, everyone, and I'll see you again on another episode of Finance Uncut.